right, so I want to point out a few things that's going on with this account, and then I will do a few trade ideas. All right, so we were in Airbnb last week. I think we put it on maybe on Friday or something such as that, and we could have got out with a huge profit on, I think it was what is this, Tuesday? It could have been Tuesday or Monday that I know that Jose was in it and he got out with like an 80% profit. I made an adjustment when the market dropped on Monday, I believe it was, and that adjustment backfired because Airbnb immediately jumped up, and then we had to make several adjustments to be able to win. Stayed in it until this morning. I put a closing order in, and it just filled just before we got on the call. And it's been really volatile. It's been down to like 157 today, and now it's up to 162. So if I would have held it a little longer, it got a little bit more. But that's, you never know what's going to happen, especially if something is moving a lot, and it's only it's the last day of trading, and it's a short day with the market today. It closes at 12 p.m. Central Standard Time, so it's not the regular 3 p.m. Central Standard Time. So and I'm going to be going out on a bike ride, like I said, so I wanted to make sure I get out of this and move on. But we won on it. We didn't win a lot. We won like a little over $23, but that's always better than the alternative, and that's losing. So if we go over here, you can see I brought this up already. This is Airbnb that we have traded. We started, the first trade was on December 18th. I believe that was Friday of last week, and we got about, after fees and commissions, we got about $23, a little over $23, $23.62 to be exact. All right, so I'm in love with Airbnb, so I'm looking to trade it again, right? I'm really bullish on it. But yesterday I was looking at a trade in it. So let me just click here really quickly. Yesterday I was looking in a trade in it, and I was thinking about doing a 22 days to go. Let's see here, selling the call side, because it's like 50%. It had to go up about 50% for this to hit that call side, and man, that's not giving any premium this morning. It was giving quite a bit of premium yesterday when I was looking at it. Man, that's brutal. And let's look at this put side really quickly, see what it's giving us. So that's 92. That's most of all of that is on the put side. So why even add the call side now? I thought we're getting like almost $2 yesterday with that call side as well. So if you add this put side, and it's at the 14 delta there, if you can get filled, you can get 88 cents over 412. So that's not bad. So let me just put this in because it's a little wide. So let's try to do this. I'm going to sell another put spread in here, and this is going to be the put spread, and that's 87. If we get filled, that's 87 divided by 412. That is 21%. 22 days to go. And like I said, I'm very bullish in this. So let's see if we can get there. And that's 93. I'm going to try one more thing, and we're going to see which one we get filled at first. If I go like this and I do a little higher than I normally do, this 20 delta at the 40, I'm really bullish on this. It's 25 days to go. That's giving me it's a 25 point expected move. So normally, like I said, it's almost 100% of the time when we're trading options, we trade between options on stock, we trade between the 15, no higher than the 15 delta. In this case, we're going to try here and see if we can get $120. That's the risk you take when you put in two things. So I just got filled on both. Didn't want to get filled on both. Actually, is that correct? Did it cancel each other out? How's that look here? What is that? What did that do? 22 days ago. Did it cancel it out? How did that work like that? Interesting. Let's see. Let's see what happened here. All right, so something's wrong. That got filled and this got filled. So one was selling the bigger one was buying or selling the 140, buying the 135. This was selling the 135, buying the 130. Why is it not showing the 30? Oh, it is showing the 30. All right, so it turned into a 10-point wide spread instead of a 2-point wide, instead of a 5-point wide spread. Got robbed. All right, so anyway, I'll look into that. Let's see. We collected 121, and if I move this to here, if I go like this, buy that, sell that, that will be 8. No, we're going to stick with this 10-point wide spread, and we'll go from there. We collected when we did it, we collected 279. So I'll take it, right? So unfortunately, that's what happens when you put it in like that. So we'll go from there. And just to point out a few things, we also had a micro put spread still on. We had 2 of these. We took one off yesterday, and then we took this one off this morning, and we were able to profit from that as well. This is an ES iron condor that we had on just 10 points wide. That is still doing fairly well with 22 days to go. The market has obviously been going up, and we're up again today quite a bit. The Russell is finally lagging a little bit, but that's 11 delta, which you know is our green area. And then on this put side is way over here. This is a 9 delta, which is also our green area. We're going to let that sit and let it play out. We're doing fine with that. We're up 48% on that. And then we have this RTY that is 22 days to go as well. The call side is a 23. The put side is a 13. We're going to let that play out. Probably want to adjust that call side until it's in the low 30 area, which is our red zone. And then we have this ZB here that is 20. Let me see. This is 29 days ago. It's up 44%, and the ZB is up today, so we're going to let that play out a little bit longer. I would put this in to close out at, if we close this out, I would put this in to close out at 4. If we can get it to fill at 4, then I will be out of that position with 7. So we're putting that in at 4. We'll see how that plays out. And then, we just put on this Airbnb position, and we have 213 left in that. We got a paycheck trade that we did was an earnings trade. Unfortunately, I did not get out when I had the chance yesterday, and then it just dropped. But this is a 24 delta here, so I'm going to let that play out. Paychecks has really been falling, but if I do something like this, I just say I sell this call side with 100 days to go. Excuse me, at the 100 strike with 22 days to go. If I sell out, I can gain another $38 in credit. And if I bring up this pay checks, I forgot the symbol already, paid and X. Okay. All right, so this is the symbol here, and that's not the symbol. Come on, type right. All right, so there we go. So the high on this was 99. So that's a possibility that it can go back up. If you're bullish on paychecks, it could go back up to 100. So I'm not going to do anything to the call side until the put side forces me to do something. We're still basically at the outside of the expected move. So I'm going to let that sit. And then this morning I was looking at a couple of trade ideas. The first trade idea I was looking at is Exxon. If you did that Airbnb with me, let me know. This next trade I was looking at is Exxon, and let's bring up the chart on Exxon really quick.
I did the Airbnb, but I've not still been filled yet.
Okay, you haven't been filled yet. Okay.
Yes, I did the 140, 135 spread.
Okay, you did 140, 135. Okay, you haven't been filled yet. All right, you did the original one I was trying to do, but that's fine. And let's see here. We have we got this Exxon position. So just let it play out. It's volatile. If you don't get in, you'll get plenty of chances to get into that. So this is the Exxon trade I was looking at this morning, and this is a this is actually a strangle. I don't recommend these very often, but I like to do a strangle in this and get out within a certain time frame. So to get about 50%. So let's put this in. We're going to do a strangle for the first time that I've recommended in a while. So we're going to send this, and there we go with that. And we're just we're going to let it play out a little bit, let it come to us. We have it at, this is the working here. We have it at, it's at the mid is 115. We have it 116. We'll see if it gets any type of movement. And if it does, we'll get filled on that. All right, so let's look at a few other things here, and then we'll call it quits today. If you don't like Exxon, maybe you like Halliburton, and it's a little cheaper than Exxon dollar wise. And looking at the chart here, let's bring up, you can see Exxon, the trade that we're doing is outside of the expected move. I mean, the 50-day moving average is 37. We're selling at 35, and at the high, we're selling on the Exxon. You can see here, we're selling, just to show you really quickly, we're selling on the call side, the 50. It hasn't been in that area in quite some time, right? So even this high right here, recent high, was like 44. So I really like that strangle if we can get filled. And then we have, where else we have here? We're looking at Halliburton here. Let's bring that up. And if you want to play an oil type of position. All right, so this is way above its 50-day moving average, which is this bluish line, and then above its 200-day moving average is 13. So if we go over here and we look at this, and let's just say we decide that we're going to do diversify and go for 57 days. If you sell the 13, it's giving you nothing. If you're bullish on this, it's if you go to the 14, I mean the 15 delta, this is the 14 delta here. This is giving you, if we even do it 5 points wide there, that's giving you $34. And then if you add the call side, 5 points wide, that's giving you 54 over. So I don't like this. I don't like this trade. If I was okay with owning it at a certain price and then maybe selling this 17 delta at like 80, maybe that's a good trade. As you can see here, this is only 174. You're getting 80. The 17 strike is a 26% chance it expired below that, and where it's been 17 strike is obviously above the 50-day moving average and so forth. So if you think the economy is going to pick up, maybe we're not going to see that 17 strike again within the next 57 days. Let's see what that 17 strike looks like with a shorter period of time, just really quickly. Going over here, let's say 22 days, looking at the 7. So you're not getting any premium there at the 17 at that point. So I'm going to stick with just doing the Airbnb and that Exxon for this morning, and we'll see that Exxon didn't get filled at 14. Let's try 15, and then we'll keep it at that point.
Okay, my ABNB just got filled.
Okay, perfect. And you got filled at 100 and something?
Yes, I did. Oh no,
okay.
I think 203 or something like that.
Well, how much did you receive for the credit?
Oh, it takes a little while. Let me look at it now.
Okay, yeah. Mm-hmm. Okay, please. It just dropped quite a bit. That's why I told you it was volatile. And okay. Unfortunately, go ahead. I
said okay.
Okay, yeah. So it just dropped. It was up, as you guys noticed and so forth. It was up, $3 more than what it is right now. But we got in at, because I was putting in 2 positions and I didn't think I would get filled before I took off that first position. It turned into a 10-point wide instead of a 50-point or a 5-point wide, but that is fine. We have a good position on in here, and if we wanted to, we could turn that into with only 22 days to go, we could turn it into an iron condor, betting that this is not going to go up that far. So this is a 10-point wide here, and you can see that you're getting another $40 there for that 10-point wide, but that's I would like more than that, but that's fine. I'm not going to add the call side until I have to adjust this put side, but I'm so bullish on this, I would probably wouldn't adjust this put side until it's about a 40 delta. So it's going to have to double its delta that we currently have right now before I would adjust that. All right, so let's see. Let me see if I wanted to talk about anything else this morning. We were talking about Riot. It's obviously went down the last yesterday, and today it's down again. It's pretty volatile. If you wanted to get in this, I think this is still a good chance to get in. It's been a very good trade. It's going to be up and down, but when it has these amazing moves, it had in the last 30 days, it's had two 30+ days percentage upwise. So obviously it's a little down today. That doesn't mean it won't be up to later today, or it don't mean it won't be down more today. But this is a volatile play that's playing Bitcoin indirectly. And I wouldn't be surprised if this is over 18. If you can see here, the probability of being 18 is changing for today, but it's a 35% chance it expire above that 18, or that's a 70% chance it's going to touch the 18 based on this implied volatility. So I like this. You can see we bought our cost basis, or where we bought the shares at was at around the 9.5, 9.5 strike there. And if you were looking to get into this and you were trying to do a bionic bull, a lot of us made a lot of money doing bionic bulls in this. This is probably, if you did, let's see what you can get to, let's see what you can do here. If you sold that one, did two of these, that's a credit of 37 cents. So it's a credit of 37 cents. You're selling 11.5. It's two contracts. Obviously, the buying power is going to be about 18 or about $1,900, but you'll get all the appreciation. And if it just stays in the range, you'll still make $37 within the next 22 days. If it shoots up to the 18, obviously it'll be a huge win for you. So this is one you can play. We've been, like I said, a number of us made a decent amount in that to this point. You can see, even though this is down today, this is still up 55%. Since I put this on. All right, so let's say that again.
I got 134 for ABNB.
Okay, awesome. You got an awesome price. Because if I went to sell this again, right, with the 10 delta, if I went to sell this with the 10 points wide, see what I would get. So I would get it's trading at 220 right now. All right, so I got a good, no, you did the 5-point wide. I'm showing you the 2-point wide. I mean the 10-point wide.